if I put this way, our inflation, as some would have it, to my mind, is not demand-driven. Now, many times you hear people talk about inflation, the first thing we mention is what? Interest rates. But does anybody sometimes take a step back? In economies where you have opened up credit markets and people have access to borrowing, and most of the, you basically have the economy linked to the interest rate, you can reduce people's buying power and therefore demand by reducing or increasing interest rates. But if we went on the street and asked how many people had access to credit in the system, I don't think we have that much. The inflation we have in Nigeria is cost-push inflation. And that is principally because we've not been able to manage infrastructure, investments, etc. So you have to ask yourself a question. How do you begin to improve that? To my mind, we're hoping that the CBN would take another major policy shift and begin to look at a monetary policy towards sustained low interest rate regime and developing and making it a policy of maintaining a positive yield curve within this regime that can be adopted by CBN. We believe that in time, it will begin to direct lending and investments away from government securities and into the real sector, factories, roads, all the things that are important to increase and create sustainable job creation. And of course, economic growth. And from a financial market perspective, the financial market product begins to create for investors, like the pension funds, etc., the places where they can begin to invest. To my mind, low interest rates would also make capital expenditure borrowing for companies more affordable and therefore supporting economic growth. Because when companies can borrow at a lower cost, it means that they're able to grow faster. And obviously, the capital expenditure borrowing from companies would then begin to support economic growth, reduce the sizes of bank NPLs from quarter to quarter, as the borrower's ability and therefore willingness to pay becomes more sustainable and becomes part of our credit culture. So before I leave, I want to go back to one final thing. As I mentioned, financial markets brings the workings of all security markets together. And I go back to this again because it's important that we realize that as we celebrate this innovation today in the currency markets, we must remember that it's just one part of the entire financial markets. We cannot, however, ignore the complete and optimal operations of liquidity of our equity markets, bond markets, etc. The foreign portfolio investor or speculator views our markets as one. They don't look at it in silos. In other words, for instance, they would look at our currency markets before investing in our bonds or our equities, as these markets are all interlinked and do not exist in silos. Therefore, to strengthen and provide the right platform for stabilizing our markets within a market-driven economy, under a floating exchange rate regime, it is imperative that the CBN begins to look at ways in which the entire financial markets can begin to work as one. This has mostly been achieved in other markets by developing and supporting dealers that can operate across the financial market spectrum. Malaysia, for one, through Bank Negara, which is its equivalent, the central bank achieved this during their market evolution by developing licensing and supporting what they called universal broker license. I would hence use this medium to advise the CBN that it's time to strengthen the domestic financial markets by empowering its participants. In other words, it's time to take a critical look at developing something similar to strengthen the Nigerian domestic market operators, and by so doing, its domestic markets, which will go a long way in helping to improve and foster financial market stability. I personally feel that FMDQ as an institution and platform is the beginning of all things wise and to come in the development of Nigeria's financial markets going forward. And we all hope and pray the board, leadership, and management team continue to grow from strength to strength in their quest to provide the right platform for a sustainable financial markets to support the Nigerian economy. So finally, I must say a big thank you and congratulations on a job well done, particularly to, again, the Governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, CON, and his entire management team, the chairman of FMDQ, Mrs. Sarah Alade Owen, Mr. Emmanuel Ukeje, Director of Financial Markets, no, actually Senior Special Advisor Financial Markets to the CBN, and of course, the Managing Director of FMDQ, Mr. Bola Onodele, popularly known as Coco, and his erstwhile team for what they've done. And of course, all those who participated in making this market come true. Thank you all for being here, the press, everybody here present, and we thank you here for being part of this inauguration. So thank you very much, and God bless. Thank you.
Thank you for that goodwill message, Mr. Ayere. So I would like to invite another director on FMDQ board to give us the closing remarks. Mr. Bayo Adeyemo.
Thank you.
Thank you.
Good morning, distinguished ladies and gentlemen. It is indeed a very exciting day in the Nigerian financial markets. And I personally feel exceptionally lucky to be part of this. Because, like had been mentioned earlier, I see a lot of seniors seated, people that dreamt this up, and we are the fortunate ones that will be trading it. My first boss, Naira-Settled, is seated there, but we are the ones that are fortunate and will be participating in this on a day-to-day basis. I'd like to start by thanking and commending the Central Bank of Nigeria for the support to see this project to fruition. And also like to essentially, thank and commend the CEO of FMDQ, Bola Onodele, for his perseverance in ensuring that this day actually happened. I would also like to thank especially Business Day and its publisher, Mr. Frank Aigbogun, apologies, Channels TV and its chairman, Mr. John Momo, the staff of FMDQ, who continue to work round the clock. We were here yesterday, and they were all in the office 24/7, really. Special thanks to the board of FMDQ, led by the chairman, Mrs. Sarah Alade, and FMDA, who birthed FMDQ actually. It gladdens one's heart, to be part of this, because the introduction of the FX futures essentially means that clients can now effectively hedge the price risk on their FX transactions. Same goes for investors, and more importantly, really, because this hedges just the price risk, it also means that the spot market has to function efficiently to essentially take care of the liquidity risk that will happen on settlement date of this non-deliverable forward FX futures. And the central bank has essentially continued to demonstrate the intention to continue to support the market and ensure that the Nigerian financial markets continues to function effectively.